What are the topics covered in RBWM? Retail banking, retail products and recovery, support services, wealth management, housing loan. These are the main topics covered. Okay. Now in support services, you have marketing also, you have MIS also, many topics. So retail banking, retail products. Hi, good evening everyone. Join fast. So what are the product topics? Retail banking, retail products, support services. Start with chapter number 1 later. So retail banking, it includes your introduction, role within the banking operations, applicability of retail banking concepts. Okay, retail banking concepts. Okay. Now there are various concepts of retail banking. Distinction between retail and corporate, wholesale. What is the role? Then you have branch profitability. Very tough one. This is really tough. Okay. Those who are watching on YouTube, you also join the classes ASAP. Today is not just the orientation class. We'll be starting with the first chapter also. Okay. We are in a crash course, so we have to hurry up. Only few days are remaining. Hi. Good evening, Ishwari. Sound is okay, everyone? Sound is okay? Yeah, Rituraj. Okay, yeah. Parvesh, what you do is log out and log in or check your internet connection because others are getting this sound okay. Okay, how many of you have newly joined? How many of you have newly joined? First time. How many of you have newly joined? Today the first lecture for RBWM. Those who are not there in the regular batch. How many of you have newly joined? Newly. First lecture. Okay. Newly joined. Anyone is new? Okay, anyone new? Anyone new? Parvesh, new. Okay, I'll give you the WhatsApp group. Okay, kindly join it without fail. Those who are new, kindly join the WhatsApp group without fail. Okay, I'll just log into it because there I'll be sharing various important documents also. One second. Those who are watching on YouTube, kindly you also join the batches immediately because I share many important documents on the groups. That is only for the paid versions. Okay, so join this ASAP. I'll be sharing one important PDF with you, Parvesh. Those who are earlier in the batch, they know this. Important PDF will be shared. That is basically your complete RBWM complete topic. Okay. Okay, so I'll be sharing with you important terms. Take this. Take this. Parvesh, others, those who have joined new, kindly join this WhatsApp group without fail. Okay, those who are watching on YouTube, you also join the classes ASAP. So, module A includes all this: introduction, retail banking, applicability of retail concepts, retail versus corporate, and branch profitability. Module B includes, this is basically about your retail products, more about your products. Okay, it includes all your CASA, then assets, then you have technology, MIS, all these topics are there. See this, customer requirements, product development process, credit scoring, important retail liability products, important retail asset products, credit and debit cards, remittance products, digitization of retail banking, role of AI in retail banking, recovery of retail loans, management information system, securitization. So these topics are mainly related to your retail banking, daily retail banking. Okay. Next, then module C, you have marketing basically, support services, that is marketing, introduction, delivery channels, delivery models, customer relationship, this CRM in retail banking, service standards, then MIS, MKIS, marketing information system. Then module D, you have wealth management. In wealth management is very big chapter actually, big topic module. It is toughest also. Importance of wealth management, investment management, tax planning, other financial product services. Okay. So here you learn the basic concept of returns, risk versus returns, high risk, high returns. Then you have last section of additional reading, housing loan. Okay, on housing loan, lender's appraisal, how to appraise a loan. What about the tax planning? What is the mortgage advice? Valuation of real property. So all these topics are under your RBWM. Okay. So now, what are banks? Let's start with chapter number 1. Okay, this is chapter number 1. Banks are financial institutions that perform deposit and lending functions. Now, sir, whatever is the basic, I'll run fast because we are in the crash course. Okay, so I won't go into the too much details over here. I'll share the PDF in the app also, and I'll share important PDF, one important complete RBWM PDF in the WhatsApp group also. Okay. And mind it, the paper generally comes from this only, this paper, this PDF and the classes. That's it. I'll be taking numericals on it. Numericals will be taking later. At the end, we'll take so that it remains fresh in your mind. Okay. So banks are financial institutions that perform deposit and lending functions. There are various types of banks in India, and each is responsible to perform different functions. Right? What are the various types of banks? Central bank means RBI, cooperative banks, commercial banks, RRBs, and LABs, local area banks. Now, what are each one? What is this each one? Central bank, as you know, RBI. Okay. Plus, now look at this. There are other bankings also: merchant banking, investment banking, wealth management, trade finance, treasury. These are all the jobs of basically banking. Now, what does the bank do? How does the bank earn money? Bank earns money through NII, net interest income. The one who is having extra funds will deposit the funds. The one who is having less funds will get the loan. So this is called as borrower. This is called as depositor. And the difference between the interest will be the bank's income. See this, deposit will be at 7%, loan will be at 9%. So difference is 2%. That is the bank's income. From here, bank will do all its expenses. Okay, this is known as NII. Okay. Parvez, this is the English batch. Okay. So this is specifically English batch. Got it? So that's why Hindi can't be explained in this batch. Okay. So look at this. This is banking. Individuals and firms. Individuals and firms. So for individuals, we have retail banking. For firms, we have corporate banking. Okay. So individuals, you have retail plus entrepreneurial. Means this comes in retail only nowadays. Okay. In retail, you have mass retail banking and class retail banking. Mass and class. Mass means everything what you do in your normal banking. Saving, current, FD, cash clearing transfer. Private banking means what? Now look at this. Private banking term over here does not mean it relates to private bank. Okay, this private banking term over here is available in your nationalized banks also. Okay, so private banking, kindly note, is not a term used for only private banks. It is used in nationalized banks also, government bank also. Then for entrepreneur we have agriculture and MSME. Kindly note, agriculture is also an entrepreneur. We call it entrepreneur, but it's actually entrepreneur. So agriculture is also an entrepreneur because he does a business. MSME is also entrepreneur, business. Now for big companies, we have wholesale banking and MSME. Okay, got it? See, what are the various types of banks? So RBI, under RBI comes scheduled banks and non-scheduled banks. Say this. Under RBI, we have scheduled banks and non-scheduled banks. Okay. So what are scheduled banks? I'll discuss this later. Firstly, understand. Under scheduled banks, you have commercial banks and cooperative banks. Under commercial banks, you have foreign banks, RRBs, public sector banks, private sector banks. Okay, under commercial banks, you have foreign bank, RRB, public sector, and private sector. Under cooperative banks, you have urban cooperative and state cooperative. Okay, so this much is enough for you for classification part. Okay, now what is each one? Let's look at it each one. Okay, what are scheduled banks? Those which are in the second schedule of RBI Act 1934. Kindly note. Those which are in the second schedule. Kindly remember this figure. Second schedule 1934 Act RBI. The schedule consists of those banks who satisfy the various parameters criteria under clause 42 of BR Act 1949. So this schedule is what it contains those banks which satisfy clause number 42 of BR Act 1949. Now this you will have to remember. As of 2008-19 means now, minimum period of capital to set up a bank in India is 500 crores, of which promoter should have at least 15% share. Okay. So now minimum capital required for opening a bank is 500 crores. At least 15% share will be with the promoter. So what are the 3 points you will remember? Second schedule of RBI Act 1934, Section 42 of BR Act 1949, and minimum 500 crores, out of which 15% will be with the promoter. Okay, got it? Now suppose if I ask you the question. Okay, if I'll ask you a question, which bank means XYZ bank is not a scheduled bank? Means what? It is not in which schedule? So it is not in second schedule of RBI Act 1934. Okay. RRBs. What are RRBs? These are special types of commercial banks that provide concessional credit to agriculture and rural sector. So name itself, look at this, RRB, Regional Rural Banks. So what do they provide? This RRBs, just one second, hold on. So RRBs are basically, these are commercial banks that provide concessional credit to agriculture and rural sector. They were established in 1975 and registered under RRB Act 1976. Now, important question which is asked in exam is this star marked. RRBs are joint venture between central government, state government and commercial banks. Central government has 50% stake, state government has 15% stake, 1-5, and commercial bank has 35% stake. Okay, 35% stake means this is called as a sponsor bank. Have you seen how many of you are working in RRB? Anyone is working in RRB? Regional Rural Bank. Your main target is agriculture, isn't it? Got it? Local area banks. Now RRBs are for sponsor is nationalized banks. Similarly, for local area banks, these are sponsored by private sector. They were introduced in India in 1996. They are organized by private sector. Earning profit is the main objective of local area banks. So they are registered under Companies Act 1956. Now 1956 is gone. Now it's 2013. Okay. So it is now 2013. Because nowadays we have latest Companies Act, that is 2013. Okay. So at present there are 4 local area banks which are mostly in South India. Okay. Now names are not asked to you. So kindly remember, for local area banks, they are organized by a private sector. This is important part. Organized by a private sector, whereas RRBs are organized by nationalized banks, commercial banks. Okay, means basically your state government banks. Okay, public sector banks. Got it? Specialized banks. What are these specialized banks? These banks are, you can say, NABARD, SIDBI. They don't have branches. Specialized banks don't have branches. They are introduced for the specific purpose only. Means NABARD is introduced for agriculture and rural development. SIDBI is for Small Industrial Development Bank. So small industries, MSME. Exim Bank is for export import. Right? Nowadays we have one more new bank that is called as NAFID, NABFID. So National Bank for Financing Infrastructure Development. So that is also another bank. So these banks don't have any branches. They don't do saving current. Okay, so what do they do? If they don't do saving current, what do they do? What do they do is they give soft loans. Now what is soft loan? Kindly understand, everyone pay attention. What is soft loan? Soft loan means, suppose let's say, I am giving a loan to any customer. Okay, generally what happens, say this, any MSME. Okay, so this MSME is getting, let's say, some loan, 100 rupees loan. So out of means this requirement is 100 rupees. So in that case, what happens? 75 rupees is given by the bank and 25 rupees is brought by the customer. Normally, everywhere, 75 by the bank, 25 by the customer. But what happens when we bring this specialized banks? What happens? From this 25 rupees, 20 rupees is given by this either SIDBI or NABARD or Exim Bank, whatever it is. Whichever bank is there, na? Specific bank, specialized bank. So 20 rupees is given by these and 5 rupees is brought in by the customer. Okay? 5 rupees is brought in by the customer. So this is the whole logic. Got it? Everyone got this? What is the role of these specialized banks? What is the role of NABARD? Tomorrow if somebody asks you, will you be able to answer? Is there anyone new who has joined just now other than Parvesh? Is there anyone new who has joined just now other than Parvesh? Parvesh, I know he has joined just now, today only. So other than Parvesh, anyone has joined? If you have joined recently, today only, okay, join this WhatsApp group. Okay, kindly join the WhatsApp group. Okay. Chalo, move on. So now Small finance banks. As the name suggests, now look at this. Small finance means what? Small finance to the smaller sector. Smaller sector means what? Micro, small, unorganized. These are all financed by small finance banks. Okay? So, providing them loans and financial assistance. So, their job is provide loans and financial assistance to small persons, micro industries, small farmers, unorganized sectors. Okay? RBI has mandated the minimum paid up capital of voting equity capital for small finance banks shall be 200 crores, except for small finance banks which are formed from cooperatives, UCBs. So minimum paid up capital for small finance banks should be 200 crores, whereas for normal banks it is 500 crores. Okay. Remember this figure. Small finance banks minimum capital 200 crores, except those which are formed from cooperative banks, urban cooperatives. Okay. So what are these few names? AU Small Finance, Equita Small Finance, Jana Small Finance. Again, these are all small finance banks. Payment banks. Now these banks are newly introduced. Again, see, small finance and payment banks. Recently they have come in. The payment banks have been conceptualized by RBI, Reserve Bank of India. People with the account in the payment bank can only deposit up to 2 lakh rupees and cannot apply for loans or credit card under this account. So people who have applied for this payment, who have account with these payment banks, can deposit an amount of rupees 2 lakh and cannot apply for loans or credit cards under this account. Okay. So 2 lakh at one time. 2 lakh means deposit an amount up to 2 lakh at one time. It's not that lifetime 2 lakh. Okay. It needs to have a minimum paid up capital of huge amount. It is, I think so, 1 million. Yeah, minimum. It's a huge amount. So minimum initial contribution by the promoter to the payment bank's paid up equity capital shall be at least 40% for the first 5 years. So in payment banks, the paid up capital, okay, owner's contribution should be 40%. Airtel Payments Bank, India Post Payment Bank, Jio Payment Bank, all these, okay. Got it, everyone? Type yes if you are understanding this, or am I going too fast? Am I going too fast? Am I going too fast? Okay. Speed is okay. Everyone, is the speed okay? If it is too fast, tell me now only. So, because we have to complete the portion also. Am I audible, everyone? Okay, I'll give you a poll. I'll give you a poll, okay? See this, I've given you a poll. Kindly answer this, everyone. I've just now given you a poll. Kindly answer this, everyone. Kindly answer it. Reply to the poll. Okay, you can see it in your own app. Reply to the poll. Okay. What is it? Let me see. What is the response? Just wait for 1 minute. It will give the results. Yeah. Okay, Rituraj, you have answered. It's yes. Okay, so. Okay, yeah, understanding. Okay. So all of those who have answered, understanding. Okay, so let's move on. So now remember, for these small finance banks, okay, minimum capital is 200 crores, but for payment banks, look at the minimum capital, 1 billion or 100 crores, we call it 100 crores. Okay, 100 crores, whereas for others it is 200 crores and 500 crores. Okay, so minimum initial contribution to the payment bank shall be at least 40% by the contributor or by the promoter. Okay, the money received as deposits can be invested in secure government securities only in form of SLR for payment banks. Okay, for payment banks they can't give the loans. Loans are not allowed. So they are allowed only to invest in SLR securities. This must amount to 75% of the demand deposit balance. Okay. So now look at this. SLR for payment banks. This must be 75% of the demand deposits. Okay. The remaining 25% is to be placed as a time deposit with scheduled commercial banks. Okay. So what is this for payment banks? Kindly note, payment banks, they don't give loans. They cannot give loans. Okay. So what do? Whatever money they get, they invest it in SLR. 75%. And 25% they put it as FD. So payment banks will be permitted to make personal payments and receive cross-border remittances on the account of current accounts. Okay. It can issue debit cards. It can provide loans through partner banks. This is also important. See this. It can't provide its own loan, but it can make a partnership, like post payment banks. That will make a partnership with SBI. Okay, so they can give SBI's loan, but they can't give their own loan. So they can act as the agent. Okay. Neobanks. This question is asked nowadays in exam. Neobanks. What is a neobank? Neobank means, kindly note, it's digital only bank. How many of you have heard about neobank? Everyone, how many of you have heard about neobank? Okay, has anyone heard about neobank? How many of you have heard about neobank? Yes or no? Just type yes or no in the comment section. Heard about neobanks? Anyone has heard about neobanks? See, neobanks are new type of banks. Okay, these banks are yeah, not heard. Acha, I'll give you. Okay. So what is a neobank? Neobanks are digital banks. Yes, Razor Pay. Correct, Ishwari. These banks are only digital banks. Digital banks means they don't have branches. There are many. Paytm, PhonePe, Razor Pay. Okay, Paytm, PhonePe, Razor Pay. All these are what? Neobanks. They don't have any branch. Okay, they do not have physical presence. Okay, they operate only on online platforms. Okay, for customers, transaction in traditional banks could require a lot of time, but neobanks provide seamless online experience by bringing in experiential digital layer on the top of the traditional banks. So they bring in a digital layer. Now this is not asked to you in exam. For in exam they only ask you this much. Digital only. They don't ask you all this digital layer. This is a technical term, but remember, at least digital only banking platform. It does not have a branch. Okay. Due to the technology driven nature, customers can create accounts by themselves and use them for offerings hassle free. Right. So nowadays in our bank also, nationalized banks, all the private banks, they can also, customer can open their own accounts nowadays, isn't it? As RBI does not permit fully digital bank establishments yet, neobanks in the country use partnership with physical banks. So nowadays, up till now, they are in partnership with physical banks. Okay. Yeah, not heard. Okay, got it. So they do a partnership. See, neobanks, there are total 17 neobanks in our country. 17. Imagine, we don't know even a single one. There are 17 neobanks. Okay. Only remember from exam point of view, these are digital only banks. That's it you remember. Okay. No physical. See this, all this again I have given. See, this is the main image, neobanks. This is a traditional bank. Okay. Brick and mortar means here I am having the branch. Okay, branch. Okay. Then we have digital bank. In digital bank, what happens? This is branch and online. Branch and online in digital banks. But in neobanks, no online, no digital, nothing digital, 100% online. Okay. So these are neobanks. Now, our role of retail banking. See, in any bank, generally 60% of the income, 60% should come through retail banking. Retail. 25% comes through generally this wholesale banking. And wealth management gives 15% of the income. So retail banking is a major income earner, major one. Retail banking is the major income earner. Okay, Bihari, you want what name? Acha, these neobanks, PhonePe, Paytm, Razorpay, these are all neobanks. Okay, all are neobanks. They don't have any branch. Okay, Bihari got it? So, wholesale banking, generally it earns 25%, wealth management it earns 15%, and retail banking earns 60%. So, major income is from retail banking. Okay? Kindly note why retail banking is less risky. See, I'll give you a simple example. Suppose if I am having, let's say, 1 crore rupees, 1 crore. In corporate banking, I'll give it to one customer. But in retail banking, I'll give 1 lakh, 1 lakh, 1 lakh to 100 customers. Right? So now in corporate banking, I have given complete 1 crore to one customer. And in retail banking, I have given 1 lakh to 100 customers. Now whose chances are more of NPA? Is it one customer or is it 100 customers? Whose chances are more for NPA? Who can become more NPA over here? Can you answer this? In the meantime, I'll just bring some water. Okay? Right? So corporate bank will have more chance of becoming NPA. Why? Because one customer. Here I am having 100 customers. All 100 can't become NPA. So that's why NPA is less in retail banking. Always. It is the largest contributor to the income. Okay? As you can see, just now we saw it. 60% of the bank's income comes from retail banking nowadays. Okay? Though banks which are in retail have less chances of NPA. Now, what are the products? Generally, in retail banking, what do we include? Deposit, saving, current, FD, then loans, housing loan, personal loan, credit cards. Okay. So, generally, we have this business and third party. We have nowadays third party also, right? Insurance, mutual fund, everything. Now, this retail banking will not only support individuals, but it will also support whom? It will also support the MSMEs, micro and small medium enterprises. It will also support them. Okay. So it includes personal banking also and MSME banking also. That's very important. Got it? Revenue from retail banking is split into interest and non-interest income. Interest and non-interest means what? What is interest income? Suppose if I'm a bank, I give the loans, right? So loans are called as my assets. So these assets or loans will give me interest. So they will pay me interest. I'll earn from them. And other is TPP, third party. Fee, commission, insurance, mutual fund. Okay. So this is all insurance, means TPP. Do you have a target for insurance, everyone, in your bank? Do you have a target for insurance in your bank? How many of you have this insurance target? You have it? Right? So nowadays it's only insurance, isn't it? Banking is less of banking and more of insurance, isn't it? Less bank and more insurance. So how do you get this this income? From loans I get it through interest, right? So various loans and credit cards and whatever loans are there, personal loan, car loan, two-wheeler loan, I'll get the interest. Okay. Non-interest income contributes around 30% of the retail banking segment's revenue. Non-interest means what? This third party. But there are certain banks like HDFC Bank. HDFC Bank has almost 60% of the non-interest income. 60%. Okay. Evolution of retail banking. When did retail banking start? First retail banking was started in 1774. Bank of Hindustan. Okay. Now about this nationalization. 1969 first nationalization, then 1980 second nationalization, right? So evolution of retail banking, it's long back. Generally, when the foreign banks came in, like Standard Chartered Bank came in, Citibank came in, at that time retail banking actually started. Means when our banks, all your banks, SBI, PNB, Bank of Baroda were earlier not the retail banks. Kindly note. Before nationalization, we were not the retail banks. We were only corporate banks. At that time, Citibank was retail bank. Standard Chartered was retail bank. Okay. So then, when the nationalization came in 1969 and 1980, then actually the retail banking started. Okay. So customer and industry segments were adopted in the business plan of the banks. There was no attempt to offer products and services based on specific customer segments in a focused way. Means earlier we were not that much particular like today. Sell, right? Yeah, correct. Sell. Nowadays you have all this, na? Sell, only sell, right? The entry of private sector banks in 1990s, early 90s, means they started actually in 1994, many of the banks. It created a competition. From the day one, they started from this single server. Earlier, our banks were not on server-based system. Means this CBS which you are seeing right now, core banking, it was not there earlier. It came in our banks after 2005, many of the banks. Okay. So, private sector banks brought the competition over here. What are the prerequisites for success of retail banking? Why? Means what will make this retail banking succeed? Firstly, channel innovation means what? What is channel innovation? I have to find out various ways to reach to the customer. Various ways. What are the various ways? Earlier, okay, imagine what used to happen earlier. Earlier, there was a bank, and customer used to come to the branch and then do all the transactions. Now, what has happened? Now, customer doesn't want to come to the branch. Customer, good customer, I'm not talking of time pass, okay? There are many customers who just want to pass the time. So they come to the branch. But good customers who give you business, okay, they generally don't want to come to the branch nowadays. They want to transact everything online. Right? So channel innovation. You have to find out various ways to reach to the customer. Okay? Direct banking, the fastest and the dominant channel of the future. Direct means nothing. Direct online, everything. Product appropriateness means you have to give the same product which is required by the customer. Pricing. Pricing means what? Suppose if the market rate right now for home loan is going on at around 8.25 to 8.5 in that range. If I give the loan at home loan at 12%, will anyone come to me? Will anyone come to me? No one. Right? So pricing should be competitive. Product appropriateness. What is required by the customer should be given. If I don't give what is required by the customer, customer will not come to me. Isn't it? Scoring models. Now this is very important, scoring models. Because of the scoring models, what happens is, okay, because of these scoring models, we can give faster loans. Okay? Faster loans means what? See, earlier loans used to take a lot of time because we didn't know what that customer is. What is his history? We didn't know. So we got all that going to the banks, finding the CR, confidential report. So it took a lot of time. Nowadays things have changed. Nowadays we have civil report immediately. In civil itself you get what? Immediately you will get what is his history. Right? Nowadays we are coming up with a new term that's called as account aggregator. Have you heard of this term, account aggregator? How many of you have heard about this term, account aggregator? Because you'll get a question on this. In exam now, kindly note, you'll get a question on account aggregator. Kindly note this. Account aggregator. You'll get a question on this. How many of you have heard this word, account aggregator? Have you heard this? Account aggregator. Yes? How many of you have heard this, account aggregator? What does it do? Have you heard? Anyone has heard of this word, account aggregator? No one? See, this account aggregator fills the gap between the rating company and the bank. Rating agency and the bank. Account aggregator. Okay? This is actually a replacement for CIBIL now. CIBIL is going to be replaced now with account aggregator. Okay? See, I'll tell you what is account aggregator. Very simple. What does CIBIL do? What does CIBIL do? CIBIL checks your past loan records. Kindly note. CIBIL checks your past loan records. Only loan records. Okay? So CIBIL will check only loan records. Whereas account aggregator not only checks loan records, it checks many other things. Your mutual fund investments, your spending habits, your mall purchase, how much you purchase in the mall, your movie habits, your utility bills. It checks everything. It takes a 360-degree view about yourself and then creates a score. Then it creates a score. So, correct Ishwar is, CIBIL will check only past loan record. Account aggregator will check not only loan, it will check many other things. So what does account aggregator do? Account aggregator simply bridges the gap. Okay, bridges the gap between the on this credit rating company and the bank and collects the data from various agencies. Okay, your electricity bill, your investment, your spending, your malls, everything. Got it? Account aggregator question will be there in exam now this time. Okay. So scoring models for CIBIL and second is consumer protection environment. Nowadays we have consumer protection, right? You do a simple mistake, single mistake in your branch, and immediately what happens? Customer says, "No, I will go to court. I will go to consumer court, right? I will go to where? One is consumer court. I will go to ombudsman. He gives you. Customer knows everything today. Customer is not the simple customer which was there earlier in 10 years back. Everyone has got smartphone, right? Immediately checks and immediately gives you, sir, you can't do this. This is my right. So see this. RBI says this, right? What are the challenges in retail banking? Consumer pricing and protection means you must be able to price the products according to the market and the requirement. Okay? Consumer protection, very important. You do a single mistake and a customer will come this barging on you, right? Inadequacy of MIS. MIS is very means not sufficient nowadays. Why? Because daily customers are added. So many new accounts are added. How can you track this MIS? Understanding KYC ML issues. Nowadays this has become very tough part, right? Money laundering. So KYC, this KYC part is very important nowadays. And this is a major challenge to the banks. Managing the risk. Okay, risk of what? The risk of lending. Effect of disruptive new technologies. Disruptive means changes. What are the changes happening? Disruption means what? Fast change, very fast change. Like AI, blockchain. These have changed the whole entire banking world now, right? Continuing growth. Continuously have to grow, right? If you stop anywhere or your growth slows down, immediately you will be thrown out of the market. Rise of the young Indian professionals, new professionals. Indians have grown like anything now. The income has also increased for the middle class. Nowadays, that 12 lakh tax benefit, then also that also has increased the income. Growth as an economic superpower. Okay, economic superpower. We are growing. We are now what, fifth largest. In fact, we have taken further position also now. Increasing the purchasing power of the middle class. So how did the middle class increase the purchasing power? Earlier also middle class had income, but now because of UPI, everything has become online. So because of this online, the money flows more in the market. And because of this, what happens? Money flows more. So because of this, what happens? Money supply is huge for the banks. Financial market reforms means what are the changes in the financial markets? So many changes have happened, right? E-rupee, CBDC has come in. What is CBDC? Have you heard about CBDC? Anyone? How many of you have an account with CBDC? How many of you have a CBDC account in your bank only? Forget other banks. Do you have a CBDC account? Anyone has a CBDC account? What is a CBDC basically? Okay, let's go back. What is CBDC? Central Bank Digital Currency. Central Bank Digital Currency, right? What happens in CBDC? Everyone, what happens in CBDC? Sincerely tell me, how many of you have heard about CBDC? Everyone. How many of you have heard about CBDC? Yeah, I'll share the WhatsApp link. How many of you have heard about CBDC? Everyone? See this Nivetha, you take this, huh? How many of you have heard about CBDC? Central Bank Digital Currency. CBDC is a central bank digital currency. It is newly developed by a whole world. All the banks are developing their own currencies. It does not have a physical note. It does not have, kindly note, there is no physical note. It is issued by central bank. Okay, issued by only central bank. There are two types of CBDCs, wholesale and retail. It is digital form of currency, only digital, kindly remember, no physical form. Exchangeable one to one. Okay, so you can exchange as, if you have 1 CBDC rupee, it means you have a 1 rupee. If you have 1 lakh CBDC rupees, it means you have 1 lakh rupees. CBDCs are legal tender. Legal tender means what? They will be honored by RBI. Okay, very important term. See, the CBDC is an important term nowadays. Okay, very important term. Shall I give you some details? You want some details? I have given this in the PDF also. The PDF which I will be sharing with you, I have given the details in that PDF also. Kindly note. Okay. If you want, I can give you the PDF in this over here also. See this. I'll share it in the comment section. Okay. So everyone kindly go through this CBDC. Okay. See this, I have shared this in the comment section. Okay, kindly go through it. Everyone copy this, paste it. Okay. Copy this, paste it. Very important one. Got it? Yeah, this will do it tomorrow. Okay, retail versus corporate. So those who are watching on YouTube and have not joined the course as yet, kindly join it ASAP. Okay? Because we'll be moving very fast from tomorrow. Okay? So everyone, bye from my side. Have you understood this? Everyone, have you understood the topic? Whatever I have marked as important will be asked in the exam. I'll be sharing with you the PDF in the WhatsApp group. Okay? So join the WhatsApp group ASAP. Got it? Chalo, bye from my side, everyone. Bye. Let's meet tomorrow. Bye everyone. Let's meet tomorrow. Okay, understood this, everyone? Fiat currency means, okay. Just 1 minute. I'll explain you the fiat currency. What is fiat currency? Fiat means, actually I'll tell you, it is not backed by any gold. Fiat means simply print the notes as much as you want. Print the notes. That's called as fiat currency. Means, kindly note, everyone might be having something in your mind. Many of you might be thinking that if I want to print a note, I need to have some gold, isn't it? We think that much. How many of you feel that? Okay, let me ask you this question and then we'll stop. How many of you feel that if RBI wants to print the notes, it has to have gold? How many of you feel? Type yes. If you feel that if RBI wants to print the notes, it needs to have gold with it. That much gold in some treasury chase somewhere. How many of you feel this? That this is right? If I want to print a note, I need to have a gold of that amount. Isn't it? Is it that? So this has been removed long back. Long back means almost 100 years back. Now no gold is required for printing the currency. This is called as fiat currency. Whenever RBI wants, for whatever amount, it can print the notes. That's called as fiat currency. Okay? So it is not backed by any gold. That is known as fiat currency. Called it Ishwari. Okay? Chalo, bye now. Okay? Bye. Don't forget to give the ratings at the end. Don't forget to give the ratings. Everyone kindly give the ratings at the end. Okay? Chalo, bye.